Hi, everyone, and thank you for joining us for Recognizing the Value in Preparing and Monitoring Annual Budgets webinar. My name is Sarah Nager, and I'm a manager for Cherry Beckert's Accounting Advisory Practice. In this CPE webinar, we will cover best practices and potential challenges and roadblocks to implementing and maintaining budget and forecasting processes. Participants will also discuss the importance of robust analytics capabilities, including skill sets and tools in successfully monitoring financial performance. Next slide. I'm joined today by my colleague, Katie Mercer, who is also a manager in Cherry Beckert's Accounting Advisory Practice. I'll let her introduce herself first.
Hey everybody, as Sarah said, my name is Katie Mercer. I am a CPA working in Cherry Beckert's accounting transformation arm. I have a bachelor's in management, master's in accounting, and my career has kind of touched every part of business operations from payroll to mergers to financial reporting. And I'm now focused around the data analytics side for getting tools and process improvements.
And I'm Sarah Nager. As I mentioned, I'm also a manager in Cherry Beckert's Accounting Advisory Practice. I have 11 years of FP&A and strategic finance experience, assisting companies of all different shapes and sizes. I got my start working in-house at a mid-sized health system, moved to a small enterprise, then followed by a stint as a first finance hire at a cannabis and lifestyle brand before landing in Cherry Beckert's advisory practice. I've been on fully integrated FP&A teams. I've built FP&A teams from scratch. I've supported pre-revenue generating entrepreneurs and supported multi-year accounting and finance transformation projects. In addition to my FP&A experience, I have a math degree and my MBA, and I have extensive experience in data analytics and automation, making Katie and I the ultimate FP&A duo. So with that, we'll jump into learning objectives for the CPE specifically. So it's for this CPE is for companies that do not have a dedicated FP&A function or would like to improve their FP&A team's efficiency and effectiveness, or for people who just want to get CPE credit. We'll be discussing the key components of FP&A functions, frameworks for successful budgeting processes, and importance of robust analytics capabilities as your company begins to evolve and grow. The case examples that we've selected today are to demonstrate how these budget frameworks can be scaled up or down to meet companies where they're at to deliver tailored solutions that are practical for those companies today and scalable for the future. The first CFO that I worked for always told me that the finance org is positioned to be a company's secret weapon. The key is to automate repetitive tasks and prioritize value add tasks. However, this does not happen overnight. We have to walk before we can run. And so we'll be discussing the key areas that you should be focusing on in order to get there. But first, we have our first polling question. So why are you attending today's session? We need help improving budget considerations and reporting. We need help with the planning and forecasting process, both A and B, to learn best practices, or just give me CPE, please. To start, let's better define the FP&A function. Next slide. Yeah, the financial planning and analysis function serves as the main cross-functional link between departments, translating business objectives into financial goals. The core philosophy of FP&A is understanding the past to predict the future. Historical data is key in unlocking the full potential of your strategic finance arm. Financial planning and analysis function focuses on translating the company's strategic plan into budgets and forecasts, developing and tracking key performance indicators, performance management and various analyses against budget and forecast, routine internal and external reporting, and support treasury management and cash forecasting needs, as well as other strategic finance needs. The creation of this workstream helps business respond in real time and provide meaningful insights and updates to stakeholders. And so one thing that we like to do when we're talking about FP&A is provide the differentiation between accounting and FP&A, because depending on your company's size, oftentimes there aren't clear lines drawn between these two functional areas. So the accounting function is considered the doers. Their focus is on accuracy, and They're booking journal entries, conducting reconciliations, producing financial statements, and providing audit and tax support, making sure everything ticks and ties. And the FP&A function are more of the reviewers, focusing on the analysis aspect and helping get things accurate. They prepare forecasts and budgets. They track key performance indicators. They review performance with management and cross-functional business partners and provide internal and external stakeholder reports. So whereas accounting concentrates on historical and present day outcomes, FP&A concentrates on future and present day outcomes. They grab the baton from the accountants in the present day and then extrapolate those numbers out to the future. So additionally, accounting focuses on department-specific goals. They need to focus on regulatory requirements, legal requirements, bank requirements, while the FP&A team has more of a business-wide or cross-functional focus. Next slide. Oh yeah, okay. So when you're just getting started in FP&A, it's really important to focus on getting your budget workstream workflows up and running and prioritize automation wherever possible. So start by mastering these work streams, keeping in mind the importance of precise and complete historical data for automation down the road. The first is the strategic plan. This is a 3 to 5 year outlook, more high level, trying to help the company have an idea of the direction the company is headed in, and really focuses on pulling together capital requirements and investing needs. The budget is a month-to-month plan for the next 12 to 18 months, and it's fixed and tracked against. Whereas the forecast is more variable, live, up and running. The budget is typically frozen by the end of the prior year and then tracked against. The forecast, however, is an update to the current fiscal year budget based on actual activity year to date. It's a more realistic view of where you're tracking and where your company is heading. And it should be tracked alongside the budget, because the budget is reported out to more high-level investors, for instance, and sometimes forecasts aren't. So forecast can really help inform whether or not there's a serious problem in the budget, and there might need to be a restatement, for instance, mid-year, because you're not going to achieve the targets, or because you're tracking way above what you planned, and you need to make sure you have the money and resources necessary to achieve the growth that you're seeing throughout the year. Reporting and performance management refers to the FP&A reports that tell business leaders how they are performing in comparison to budget and how that impacts ongoing forecasts. When I was in industry, we would do 4 quarterly forecasts that would get shared out, but our team was updating the forecasts and reviewing them with stakeholders on a monthly basis. And then the last is KPI benchmarking. It's used to compare the company's overall health against industry, against itself, and against competitors. Usually there's a healthy range for each of the KPIs, and you want to make sure that you're within the healthy range if you're leading, lagging, or within the healthy range. Those are always really important. And you update these as needed, especially if you're in a volatile industry where things are changing constantly. So with that, I'm going to pass it over to Katie to discuss FP&A function optimization.
Thank you, Sarah. So now that we know what FP&A is, let's talk about how to optimize it. So an optimized FP&A function is going to sit at the center of finance, accounting, operations, and strategy. And it's going to spend the majority of time on areas that actually lead to value creation, which is namely decision support and trend identification. So companies at any stage and size can optimize their FP&A function, but it does take the right people, the right tools, and time. You're going to want to start by prioritizing getting clean and precise data. This is needed before you can even jump into automation, because if your data is not clean and well-defined, the same will be true of the automated process or your calculations. In addition, you're going to want to develop talent beyond just their core finance capabilities. So you're going to want people who know data analytics skills, have extensive industry knowledge, and business model knowledge so that they can implement things appropriately within your team. In addition, you want to be able to establish the team as a trusted business partner to all areas of the business, including the C-suite. People with both hard and soft skills are necessary so you can communicate your strategy effective across your departments. They also need to create a culture of continuous improvement around process. So this involves knowing what your contingencies are, your bottlenecks, and also celebrating employees who prioritize eliminating these risks and process efficiency. Lastly, you're going to want to maintain a talent and technology roadmap informed by the strategic plan of the company. This is going to require that you identify your current state, where you're headed, and where you would like to end up. So before we jump into budget process considerations, we want to give you the opportunity to identify where your current state is and review some key considerations that our clients have had at each of these stages. So we broke it out into 4. We have non-existent, where your company is mostly focused on your accounting efforts. There's accounting led, where leadership has asked accounting to actually prepare budgets and forecasts, but it's just accounting. There's no one dedicated. Then we have a single resource when you do have a hired dedicated resource with some consideration for the future. And then lastly, a standalone department where you have an entire team of dedicated resources to do budgeting and forecasting and have a process in place. Regardless of the stage, though, we have been able to help our clients with many of their finance and accounting needs. We've included some considerations on this slide that show some examples of questions we've had from clients at each of these stages, and we've been able to help. So from arduous reporting, difficulty understanding financials, ensuring accurate budgeting and forecasting that accounts for unknowns, streamlining the FP&A process to integrate with other departments to ensure the FP&A team is aligning with the company's strategic plans, and then reducing inefficiencies within the FP&A function through process improvement, data analysis tools, and software capabilities. All right, next up, we've got our poll number 2. Identify your current state based on the previous slide. Where are you guys currently at? All right, looks like most of our people have accounting led. We got 55% with accounting led. We got 22% where you have a full standalone department. Love to see it. And then 14 with a single resource and 9% non-existent. We all start non-existent someday, somewhere, guys. So it's okay. We can work your way through it, work you up. All right, I'm going to pass it back to Sarah to talk about our key considerations for the successful budget process.
Awesome. Thank you, Katie. Now that you have an idea of where you're currently at, let's talk about some key considerations for successful budget process at companies of any size and maturity. They are set clear financial goals during the strategic planning process, as well as during the budget process. Involve all stakeholders. Budget is a cross-functional exercise, not a finance and accounting exercise. Make a calendar and stick to your deadlines. As with everything in FP&A, use data to support budget assumptions using both historical and planning data if available. Pressure test your assumptions, leaving time in the budget process to analyze and define best and worst case scenarios, and setting up risk mitigation strategies. And then once the budget is locked in place, the budget needs to be monitored and reviewed with all stakeholders in a way that those stakeholders understand and can take action to remedy the risks that arise throughout the year. So next slide. The idea is to let the strategic plan be the guide. It should guide it. The strategic plan is the guide to setting clear financial goals during the budget process. The strategic planning process focuses on the future vision of the company and aligns mission, position, objectives to create a tailored and specific long-term strategy upon which the budget is built. Whereas the long-term strategy provides a more high-level projection within the next 3 to 5 year outlook, the operating budget is the detailed plan on what the company is going to do in the next year to 18 months to achieve the company's vision. Strategic plan is more business model top-down planning approach, whereas with some bottoms-up considerations, whereas the budget is typically more of a bottoms-up build exercise. So like I mentioned, and will keep mentioning until I'm blue in the face, the budget is a cross-functional exercise. The finance and accounting department are the trusted business partners linking the business and operations story to the overall financial health and performance of the company. And their job is to also communicate that to internal and external stakeholders. I want to be clear here, though, that you don't need a full team devoted to each function, especially for those of you with a non-existent FP&A arm. It is really just important that when you're setting up the budget process, you understand the purpose of each of these different categories of stakeholders and what their role is within the process, and segment duties accordingly. So the strategy leaders and key company decision makers, this includes the CEO and board of directors, as well as if your company has a devoted strategy team, they're also often involved. Their role is to set the overall financial goals and strategy of the company and to provide guidance and approval of the budget. So they're responsible for overseeing financial performance, and the finance department is responsible each month after performance reviews to provide that information to them to help them ensure that the company is on track. The finance department is responsible for creating the budget, analyzing the financial data, and providing recommendations for budget allocations. They're also responsible for monitoring and reporting the budget throughout the year and getting together all of the feedback they need to tell the story and relay that over to leadership and the board of directors. And then finally, the operation and department heads. These are designated leaders for the departments. They're responsible for creating the budget for their department. And oftentimes, as companies grow and scale, there will be some compensation linked to that area, to that person's ability to achieve their budget and targets. So it's important that the managers who are responsible for implementing the budget within their department are able to align their spending with the budget and work closely with finance to monitor and make adjustments as needed throughout the year. Again, depending on your company's maturity, there may be crossover between these groups. You don't need a dedicated function for each, but it's just important to distinguish between the different roles within the budget process. So next up, next slide. The FP&A team is responsible for 3 key budget phases: the planning phase, the planning and modeling phase, the consolidating phase, and the performance reviews. While process can vary across companies, the timing is generally the same. In Q3, strategic planning takes place, and the plan is typically finalized by the start of Q4. These sessions are led by the strategy team and rolled out to the other 2 stakeholder groups once it's finalized. Q4 then kicks off the budget planning process, where finance and business leaders work together to create a plan for achieving the near-term goals outlined in the strategic plan. Budget is typically finalized and approved by the strategy team or board of directors by prior year end or early Q1 once the year is closed out. And then for the next 12 months, finance and business leaders must monitor and track against the budget, updating forecasts to compare current and year-to-go projections against their budget. So as I mentioned before, there are 3 key phases to the annual budget process, all of which can be super cumbersome without prioritizing data and automation. I would say planning and modeling is the most challenging in terms of accuracy and modeling, as well as automating, because there are so many different nuances and learnings throughout the planning process. A lot of stuff comes up that just can't be automatically modeled unless you have the funds to invest in a fully automated software. But even that can, that requires specialty experience by the people who are running it to really be able to get the most for that software. So historical data should always be considered during the planning and modeling process to help identify trends and patterns. And then existing reports should be leveraged as well outside of the GL data. For instance, sales pipeline information, marketing campaigns and expectations around those, inventory planning, and any other near-term planning materials that drive large revenue, have large impacts on revenue or costs. The consolidations phase actually is not a standalone phase. It happens quite frequently throughout the budget process, going back and forth from planning and modeling to consolidating and until the budget is finalized. So this is honestly one of the easiest areas to automate of the 3 phases. Getting data competencies up to par. It's really just about creating templates that can be streamlined and rolled up easily to be able to get a full picture of what the budget looks like from each of the different business groups. And then in the tracking and reporting phase, we really want to prioritize data competencies for tracking both financial and operational key performance indicators. And there's software and automation. Those require an accurate data and solid process before you can really get the most out of the software. So focusing on your process and clean data is a really good first step if you are not at the point of being ready to invest in software specifically. So as we previously mentioned, consolidations are the easiest step to automate. And here's an example of how we've been able to expedite consolidations for a vertically integrated publicly traded cannabis company. At the time, cannabis investments were at an all-time low on the West Coast, and the cannabis company's refresh strategic plan required divestment from certain retail locations on the West Coast. And the board was going to make their final decision based on the projections for the next 3 years of the 15 retail locations. However, the company's new CFO and team were inundated with their annual budget process, so they weren't able to get these 3-year projections out. They needed to create projections. They needed a consolidations tool that would roll up all 4 of their verticals. They needed individual projections for their 15 retail locations on the West Coast. And then they also needed a dynamic scenario reporting tool that the CFO could use for on-the-spot analyses and comparisons as questions arose throughout the board conversation when they were trying to decide which locations to divest in. So we were able to actually create a budget consolidations model using templates that are easy to update and very intuitive, reducing their consolidations efforts from 4 days to 1 day. The consolidations model was so intuitive and built kind of around what the team was requesting or what they had visioned that it really just took 2 hours to train them, and we really haven't heard from them since. So I'm assuming it's going very well. We also expanded their consolidated budget outlook based on the information from the planning sessions that we had with business leaders and their CFO. And then we developed a dynamic summary dashboard that had the specific cases that the CFO knew the board was looking at to be able to show what the inclusion or exclusion of certain key locations on the West Coast looked like. And there was no follow-up coming out of that meeting. They were able to make the decision on the spot on that call. And so this is just one example of how consolidations can be simplified and solutions can be tailored to the exact needs of the company, depending on where they're at. Next slide, yeah. So switching gears, it's really challenging to cover revenue modeling in a single session because it varies based on your industry, your company's business model, and a couple of other factors that we could spend an entire webinar talking about it. However, we do have time to talk about a few popular approaches to budgeting that really help companies get a handle on their spending. Most companies use a combination of these approaches outlined on the slide, depending on the company's business model and the magnitude of their expense accounts. But it's always as is always the case, with more precision means more time and effort from all stakeholders involved in the forecasting process. Incremental budgeting it combines historical performance with expected growth rates. This methodology is used, it's super common, it's probably the most intuitive, and it's really useful even if you're doing an activity-based or value proposition-based for recurring flat expenses, for instance, like rent. Rent is going to stay the same unless you're moving or something's changing. You're going to have the same rent, maybe with a cost of inflation or cost of living adjustment on top. Activity-based focuses on activities and processes required to produce goods and services. This model is really good for companies in manufacturing, professional services, etc. And then value proposition allocates resources based on a company's plan to fulfill the needs and preferences of consumers. So this is really good for companies who are trying to portray a cohesive ethos to their customers, like a brand or a company with a licensing model. And then a zero-based is exactly what it sounds like. You eliminate all expenses and you build from the bottom up. This is really good for companies who have gone through multiple acquisitions, need to do a strategic alignment, need to find cost synergies, and really be able to take advantage of the scale that they've grown with these acquisitions. As I mentioned before, it's imperative that you bake time into your planning process to spend time on scenario analysis and risk mitigation. It's essential to have a full picture of potential outcomes and necessary levers that will need to be in place should things deviate from the finalized budget and operating plan. To do this, you need to pressure test assumptions, figure out where the most sensitivity is within your plan, and be able to identify risks and opportunities, quantifying the financial impacts and likelihood of each scenario, and understanding what the best and worst case is, because typically what ends up happening is somewhere in the middle. And then additionally, it's so important that you have a complete view of all financial and operating KPIs, a complete view, and you're not just looking at specific KPIs that don't necessarily show the complete picture. It's really easy to focus on the KPIs that you excel in, but the real story lies in where you're not excelling. And we have, a case where we talk about that. So we worked with a company earlier this year, evaluating the reasonableness of their 2024 projections, and we discovered a big part of their uncertainty came from their poorly defined KPIs. The client was a home services company that had recently reduced their revenue generating workforce by 20%. And their private equity company who had backed them was concerned that they had let too many employees go to be able to achieve their top line targets for the year. We faced a number of challenges during our evaluation, like the fact that they used a proprietary model for forecasting demand. So we weren't really able to drill into the assumptions or look at how they were offsetting demand with supply limitations. There's the fact that they had multiple data sources and KPIs were defined slightly differently depending on the brand. And this is really common for companies with M&A strategies like this company had. And then also they had been overstaffed for so long that their historical data didn't support the company's story that they were trying to tell about how performance was going to look in the future and how much revenue a single tech would be able to provide for the company. So we found that the company wasn't focused enough on supply KPIs. Specifically, they were not using a utilization or capacity metric for their techs. They were really only looking at the revenue that each tech could drive without any upper bound on what the maximum they could drive. So we were able to set them up with a complete set of KPIs that identified healthy ranges and contemplates both supply and demand, painting a full picture. To do this, we helped the team collect the information they needed directly from business leaders at each of the brands regarding how long it took for different appointment types and how many techs were needed on each appointment, how many appointments could be completed in a day, etc. And then we were able to build capacity metrics there to identify what a tech could realistically do each day. This way, the company had a metric to track demand against to ensure that they had the supply to fully capture the demand that they were predicting would come to them. We also provided the client with a way of tracking process so that they would be able to adjust these KPI ranges should the primary research we did with the brand leaders turn out to be wrong. We created a tracking process so that they could adjust as they learned as more data came in. So now with that, we'll take a quick polling question break. So have you ever worked with an outside expert on your FP&A roadmap? Yes. No, we are all set. No, but we are curious what that could look like. Communication and performance reviews are where we see companies fail for a number of reasons. Difficulty locking in budget, challenges tracing actuals to budget, tense relationships between operations and finance, the list can go on. The success of monthly performance review meetings with finance and business leaders are crucial, though, for forecasting accuracy and for the overall financial agility of the company. It takes time to build these relationships, so the finance team and business leaders should be meeting frequently and building rapport with one another, understanding what they bring to the table in terms of planning sophistication and how they can help each other and lean on each other with their complementary knowledge of the business. The reports used during these calls should be tailored to those accountable for the goals. For leaders with compensation tied to budgets, the FP&A team should be providing that leader with a report showing only the portion of the budget they're responsible for. And the session should involve the FP&A team investigating what happened and the business leader providing a glimpse of what's to come. With this information, the finance team can adjust the forecast accordingly and provide these details to strategy leaders. And this slide shows a simplified view of the performance review we provided one of our manufacturing clients, showing month-to-date and year-to-date performance, as well as year-to-go, comparing against forecast and budget to see how you're trending now versus what you thought you would be doing when you locked the budget in place at the beginning of the year. And then on the next slide, we have a more specific use case example showing the performance review we put together for a financial services tech company for their gross sales forecast. This case is an example of an optimized performance review process. So this is just really what, after years of working and road mapping, you too can achieve if you have a good understanding of where you're at and where you want to go and get all of the right things put into place. So in this case, we took the company had integrated FP&A teams, but did not have a group supporting the sales org. And they had done a bunch of CRM cleanup and creating policies and processes around updating accurately. And so now they had really clean data to be forecasting their sales off of. Whereas before they were using a variety of different methods for doing their sales forecast. Now they were using their sales data to actually be able to produce forecasts and budgets. So the tool that we built them leveraged this data and gave them actionable feedback to review with business leaders. So the forecasting tool differentiated between planned and unplanned sales. The planned sales were deals that were in the pipeline or CRM at the time that budget was created. And then unplanned or go and get were deals that were not in CRM at the time of the budget, but it's the portion of the budget that didn't have that would be more risky because there wasn't a deal driving those numbers already in the system at the time of the budget creation. So the tool also broke down year-to-go impact of planned wins and losses, and it compared that against go and get wins. So whenever planned adjustment was less than 0, what they needed to check was that the go and get year-to-go adjustment offset that loss from the planned period. So if that wasn't the case, then the leaders now had a way of knowing that they needed to sound the alarm and work with, for instance, the marketing team to garner more interest in their products, or there likely needed to be a mid-year adjustment to their budget. So again, this didn't happen overnight. It took the company a couple of years to get to this level of accurate reporting and collaboration, but the company was able to get a clear understanding of where they were at, paint a clear picture of their vision for the future, and create a reasonable, achievable roadmap and hire the right people and talent to get themselves to that desired state. So with that, I'll pass it back over to Katie to discuss more about enabling robust analytics and touch on software that I know a lot of you are excited to hear about.
All right, thank you, Sarah. So keys to enabling a robust data analytics. As I've previously said before, data is central to the ethos of FP&A, so we're going to want to address some important considerations for all companies to enable those analytics and automate processes successfully. So again, accurate data is what allows you to rely on the results of your FP&A function, right? So process efficiency and sophistication is going to be limited by your investment in people and technology. The most efficient processes are supported by the right people and the right technology. Your people are what manage and support these processes, and it's important to develop them beyond the finance capabilities, right? So we're going to need people who are program and project managers, process and automation specialists, data analysts, software experts, etc. Their skills should add to the efficiency of the process and be able to support and run the technology as it's being implemented. So you're going to want to consider what skills need to be in-house as well versus any benefits of outsourcing some of these stages. Technology is then added to facilitate and automate these processes. However, it cannot be fully optimized without clean and complete data and the right bench of skills on your team to be able to implement that technology. For a company to effectively implement and maintain their budget process, people and technology roadmaps have to be considered together. So your technology is really only good as the people you invest in, and the people are only as good as the technology that you implement that enables them. So the primary goal at any stage of what software you have is to maintain a single source of truth for all data used by the accounting and finance department. Success is going to be based on the strength of process and risk identification. So we have three here that we've listed. We have pre-ERP, ERP, and EPM, which is enterprise performance management. So pre-ERP, you're going to be looking at using a SQL server, potentially QuickBooks. You have everything in spreadsheets. Your people are going to know basic database knowledge, intermediate Excel, and just general accounting knowledge. Moving into ERP, you get things like NetSuite and Sage, which we've worked a lot with. And those enable you to use BI tools and analytics to be able to better look at your data. And then you have enterprise performance management, and that's going to look like something like Hyperion, OneStream, Anaplan, and that's going to consolidate everything together to get a full picture of what you're looking at a much higher detailed level. So we have a case study that we did, example of what you can do pre-ERP. So we assisted a young and rapidly growing healthcare company that was leveraging an SQL server in lieu of an ERP. So they were at that first stage pre-ERP with little involvement from accounting and the overall operations of the company. This caused a disconnect between the FP&A and accounting function and operations to ultimately result in incorrect data being retained and utilized in their financial reporting. The accounting department had noticed that their revenue was not reconciling to their operations software, and the month-end AR process was manual and cumbersome. So we were tasked with figuring out why. Why is it not reconciling? And then to help develop a more efficient process going forward. So we completed this reconciliation utilizing Power Query and identified that the 500,000 unreconciled transactions were not being properly tracked in their operation system. A lot of times, other companies will build operation software without taking into consideration how that affects accounting. Happens all the time, and that's basically half of our job, I feel like. But yeah, having no single source of truth, we had to develop an analysis using Power Query that would identify the differences between the months using snapshots of the data that was retained by the accounting department. Once we had developed their single source of truth, we were then able to identify several deficiencies in their process that caused issues, such as transactions that were missing between months, duplicated transactions, variances in amounts recorded between months, and transactions that were identified by operations to be updated, but they were never actually updated in their operations system to then affect their accounting. And this was all at the end of the day due to the billing and adjudication software lacking the proper processes and accountability to make sure things were accurate. We were able to design and test our newly developed data repository to ensure accurate data with built-in controls and recommended better cross-functional collaboration through clearly defined roles and responsibilities. As we previously discussed, your finance role needs to be able to speak the language of your other departments so they can get on board with your efforts to make changes for the better of the company as a whole. Finally, the data repository created was able to automate the process. So because of how Power Query operates, you throw something into a folder, you hit a refresh button, and it does every single task that you previous did again. You just let your computer run. It's a beautiful thing. You sit there for 5 minutes and you didn't have to do anything. But it ended up saving the team over 40 hours of time reconciling from month to month. All right, moving on, similar to earlier when we talked about identifying your current state with FP&A, we have outlined the different stages we have been able to bucket for our clients and provide tailored advice. So starting with non-existent, you have your entry-level staff, just mostly completing data entry tasks, limited ERP. You're going to be looking at spreadsheet software and data repositories. What's really nice is it's low cost, but you're going to have no automation. There's no analytics. It's very hard to see what's actually going on at your company. Once you need more analytics, we're going to get into cleanse and consolidate. As we said, we want to make sure that our data is clean and accurate so we can actually use it. So at this stage, you're going to want experienced staff to process the data and consolidate it into useful metrics. So you're going to utilize early to mid market ERP systems like Sage, and potentially some dashboards with spreadsheet software. This is also going to be low cost, but it's also low automation. It's very bulky, and you have to have a lot of experienced people who know what they're doing to make something that is actually useful. And there's also very limited analytics that you can produce with this data. Moving on to the next one, insights and dashboards. You're going to want experienced staff with high levels of data analytics capabilities to process data with dashboards and provide automated data metrics. So this is also going to be mid-market ERPs, a little bit more advanced, and you're going to want people who know actual like data process tools like Power BI, Tableau. You're going to really want some people who might know things like Python to be able to do some like statistical analyses. This is also going to be a little bit more costly. It's mid to low cost. There are some really good things you can do, which I'll get to a little bit later, for very cheap. Power BI is a very good tool that comes with the Microsoft Suite. The online version is completely free. You can also pay for a fairly cheap version that's a desktop version, but that does allow you to automate some of your tasks and also provide really good analytics capabilities. Finally, we have our full integration. So a fully integrated team with strong data analytics capabilities, providing high quality, highly automated metrics with integrated FP&A software. So this is mid to enterprise level ERPs, very expensive SAP, all those fun stuff. This is going to cost a lot more, but you are going to have the most advanced automation skills, capabilities, and analytics to be able to see high level everything you need to see, going down to the nitty gritty as much as you need. So some examples that we have of some dashboards that you can kind of do. This is an example we have of a fundraising dashboard for a pre-revenue software as a service company in Excel. So as you can see, like very dynamic, you can do a lot of fun things in Excel. I'm sure you're all very, very familiar with the capabilities of Excel, but there's some really interesting things that you can do in there that it's not that expensive. It's just a time commitment, right? It's all time. My favorite tool though is Power BI. I've grown to love it. It has a lot of really great tools in there. They've got things like, as I'm showing on here, they have a map, so you can literally visualize on a map where things are happening in your business. They have a tool where you can break it out versus different areas and sales. And what my favorite piece of it is that it allows you to drill through and drill down and hover. So it's dynamic. It's a dynamic tool that where if you, for instance, if you hovered over April, you can see in April exactly what you've spent in your tools. So very easy to make. It's free. If all you need is somebody who knows how to properly utilize these tools to give you really great output so you can make better decisions. All right, so let's go to polling question number 4. How would you rank your analytics capabilities? And Maddie, if we could show the results on this one, I want to see it.
Yes, of course. All right, I'm going to leave the poll open for 5 more seconds. Submit now, and then we'll show those results.
All right, not too surprised. Most people are at the cleansing and consolidating phase, which thank you from my end. We love it whenever people make sure that their data is clean. That is a big portion of where I end up stepping in a lot to make sure I can clean up your data. It takes a lot of time if it's not clean, and I mean, a lot of the times that's where a lot of people come in, right? They have a hot mess and they can't handle it anymore, and it's overwhelming. But we have the skills and capabilities to take that and run with it to give you something that's actually usable. All right. So wrapping everything up, just kind of final thoughts here and kind of reiterating things that we've kind of been drilling really hard this whole webinar. The key to budget process objectives and considerations. You really need to have a framework for your company at every stage and every size. You need to know what you're doing and where you're going. It also takes time to fully optimize the FP&A function. And again, start with your data. You need to start with that data and know that it will take time to make that data tell you what it needs to say. Make sure to build budgets with your stakeholders and your strategic plan in mind to maximize your value creation, including risk scenario analyses and variance reporting. And the capabilities of your team and technology should grow as your business grows. You need to know where you're at and review your roadmap to make decisions. And with all that said, our team has successfully leveraged this framework to meet dozens of companies where they're at and assist in optimizing their finance and accounting functions. And I hope that you're now able to identify how your company can improve and optimize your FP&A processes. Thanks, everyone.
Awesome. So we want to open it up for Q&A. I know there have been a lot of questions coming in on the Q&A, so we wanted to take a second to talk through some of those. So we have one question about recommendations for software that support FP&A functions and integrates with ERP. This is a loaded question. There are so many options out there. I think we covered this a little bit with Katie's slide. Like whether or not you want to use, BI tools to automate, or if you're ready and have the processes in place to implement and the bench available to implement a software and then have them be running it. It's a different skill set for the team. And so it is cumbersome, and we see a lot of implementations fail, especially if the ERP isn't being fully leveraged or properly leveraged. So it is challenging for us to make a recommendation without really knowing your company size, what you need. And then, so, I mean, I hope that kind of answers the question. We have like a big list of like a comparative analysis of the different FP&A tools. So just depending on your company size, we can kind of dig in and look at what we have reviewed in-house on our team of what people have experience with. But it's challenging, again, because there's stuff out there for companies of all different shapes and sizes. So the next question we had was, how do you track go and get projections versus actual? Do you use the chart of accounts and track sales that are go and get? So I would recommend for your large account categories, it really depends, but building your budget from the bottom up, and whoever the team is responsible for those building blocks, what are the drivers of your revenue or sales? And what are the limiting factors? For instance, supply versus demand, right? And really get a model that works for your business model that contemplates both of those things, and build at the lowest building block that your GL or that your ERP or that you're tracking at in QuickBooks. Make sure that you have the same data that you're using to build your forecast is also coming through and being seen by the ERP or being processed by the ERP. For instance, if you're doing inventory planning, make sure that you're planning at the SKU level, and then you have the sale of those SKUs, right? So you, like for a retail company, you'd be looking at the SKU level and the average price per SKU, for instance, and then be tracking which SKUs are performing well on budget, which SKUs aren't performing well on budget. So that's the example that I can give there. And if you have more specific questions, we can get into it. Again, I think revenue can be an entire course, like a week-long course. And it really just depends on your business model and what the key drivers are of your revenue or your costs. Yes, we do. We have quite a few Alteryx specialists on our team. I can kind of
That's
let
actually
Katie. Yeah, I
I
was
was
gonna
gonna say
say
that's
Katie
probably a
should
me
speak to this
question.
one. Yeah.
I personally do use Alteryx. I have used it in the past. I have very strong opinions about Alteryx. My opinion on that is that it's an expensive software that you honestly can do the majority of tasks in Alteryx in Power Query. So if you learn how to do Power Query, it's not as visual. So that's one really good part of Alteryx, is it gives you a very visualized data flow of where you're pulling things. So it's very easy if you're a visual learner, super great. Power Query is a lot more like reading. They have a sidebar that shows you all the tasks that you're doing step by step by step, show your steps. But it isn't very visual. It's more so better if you are somebody who's really good at like coding. If you're coding savvy, Power Query is the way to go. But personally, I'm very much into Power Query because it is basically free. It comes with Excel. It's built into Excel, and it does the same stuff.
Much faster.
Much faster.
Okay, so
Also,
oh, go
I saw
on.
there was a reference to learn the Excel dashboards in Power BI, or we self-taught. So for me, I had some really good mentors that taught me kind of the basics. And then honestly, there's just YouTube, if I'm being really honest. You can YouTube anything at this point. We have really great resources you can just look on, uh, and just kind of like walk through some things. I actually led a training with our department over Power Query recently. Maybe we should just post that, Sarah. Maybe I should just post that to YouTube so everyone can watch it.
Yeah, it was a great training. And I also will say that I do the same thing for Excel modeling, as well as when I'm doing SQL. The Reddit actually has really great forums for coding too, believe it or not. So if you're looking to do something tricky, someone might be also have asked that in the past, and Reddit's a really good place to go. Um,
But yeah,
so
if
the
you do
next,
want to learn it, like you can just go into the data tab in Excel and play around. Just like upload something into the data tab and just go in there and start clicking around. That's honestly how I learned the majority of stuff, is just messing around and finding out what it does. Just do something that's not important.
yeah. Okay, so the next question is, can FP&A be applicable to a very small company? When all the employees are competing with each other to each show they're performing better than the other owner. Well, I think that that kind of comes back to the conversation on the relationship between finance and accounting and the rest of the business. It's really important that it's collaborative and that the culture is collaborative. I think it's really hard for people to get teamwork or like have any sort of success in processes that involve other teams' inputs if you don't have that collaborative culture. So that would be very challenging. But it is possible. People get budgets done. But that sounds like a challenge for sure. That's a polling question. References in order. Okay. Yeah, we already mentioned Reddit and that stuff. What are good SMART goals for an FP&A function? Interesting. I think we kind of covered this. I think this is, again, something that we could kind of sit down and talk about, depending on your company. That's, again, a loaded question. We kind of showed you how the scale kind of shifts and what needs a company has for their FP&A function, depending on what stage you're at. So figuring out SMART goals, like those will be challenging and different for each company. Or another Power BI. Oh, here's what is your assessment of standalone software tools such as Jira, LiveFlow, Fathom for small to medium-sized companies?
I can actually
Katie?
speak to Fathom, Sarah.
Yeah, I know
I'm actually we actually just did a thing with a Fathom representative because we were thinking about pulling it in, and I'm actually certified in Fathom. I love it. I love
I'm a big
Fathom. I
fan.
think that
Yeah.
it's a really great user interface. It pulls in things very cleanly. When they designed it, they really actually thought about how this was going to affect the people who have to use it. I've personally loved it. I haven't used the other ones that you mentioned, but I do really love Fathom. I will say that.
What level of granularity do you recommend for budgeting to effectively balance detailed tracking with ease of management and analysis? Do you recommend budgeting by detail, vendor, or type of costs? It really depends. I actually am a huge fan of vendor forecasts, but it gets challenging when you have multiple entities or multiple teams using the same vendor, knowing how to allocate those amounts. So you kind of have to create rules when you're doing vendor. It's really important to be looking at like historical performance and that kind of stuff. I think granularity makes it easier to track, but sometimes going too granular makes it more difficult to track, right? So sometimes it's easier if you're a smaller company to just track all sales and marketing as sales and marketing. And then if you're off, you can break out what those allocations were. But as you grow and scale with the ERP and the software, it makes it a lot like integrated software. It makes it a lot easier to compare. So again, it's hard to be able to be prescriptive in a Q&A without knowing more about the company. But granularity is good, but it's not always best. It's like sometimes too granular is too cumbersome and not worth it. I hope that answers the question. All right. What is what are the basic KPI and industry benchmarking you would recommend for a not-for-profit organization? So I don't have a ton of not-for-profit experience. Katie, are you super well versed in not-for-profit?
Have a little bit of experience. I mean, the main thing on that is gonna really be like what's your goals, right? So for non-for-profits, like you have different actual strategic goals that you're looking for. And so that's really going to hinge on what we're gonna be able to recommend on that front. Just because like one non-for-profit might be having a goal of like saving so many people from homelessness, right? But if you're a not-for-profit doing something like disaster relief, you're gonna want to look at like how many people like have you like homes repaired, or like there's various metrics here that can be put into place to look at. But I think at the end of the day, you're really just going to want to look at your strategy, like what's your main goal here? What are we looking for? What are we trying to achieve? And that's what you're going to want to pivot your KPIs to actually reflect.
Outside of the KPIs that you're mandated to track based off of the
Correct.
grants, right? So
Yes.
it's a really general question, but if we had more information on the not-for-profit, we could definitely come up with a suite of KPIs that should be looked at and help set benchmarks for those. Do you have experience or opinions with GP for actuals and profits for budget and reporting? GP actuals pulled into profits hourly. I have not used either of those softwares.
Yeah, those are new for me as well.
But that's awesome that it syncs hourly, because typically that's more of like a daily type thing, at least in my experience. So
We'll have to go look at those.
yeah,
There's
thank
so many
you.
softwares out there. I did like a huge like days long research stint just trying to find some of the newer softwares that we have out there to see if any of the new ones that are popping up are better than what we're currently using. So I love being told about new stuff that's going to be even better.
Yeah, okay. And I know we're at time, so I want to move on, but I do see the other questions. We love revenue modeling. We could consider doing a webinar. We are at Blackline. We love Blackline on our team. We have people who are specialized in it. And yes, we do recommend SQL and Power BI, and we can talk through differences if you're interested in continuing the conversation. But with that, we wanted to thank everyone for coming to the webinar. This concludes our webinar for today. And please reach out to me and Katie directly at any time if you have any additional questions. We value your feedback and ask that you take part in a short survey, which will appear when you leave the session. Just a reminder, recordings will be available in about a week. Thank you, everyone, and please take care.
Thanks, everybody.